Hey, welcome to Ohio Real Estate. Good afternoon. My name is Jason Ferrier. I'm a real estate agent. I'm also a small town investor just outside of Columbus, Ohio. And today is our Redfin, our weekly routine of our Redfin housing market update. So, Redfin puts out an update every single week, generally every week, usually on Thursdays around 8, 9 a.m. Eastern. And now it's our chance to dive into the update together and look at the national picture from a Redfin standpoint. And then we'll also have a chance to dive into some submarkets. So we're going to look at Columbus, Ohio, because I'm in Ohio. So every week I look at Columbus for a few minutes and give an update there. And then we're also going to look at a couple areas, submarkets that some viewers on the channel wanted me to look at on the live. So one was Minnesota. We're going to look at a couple spots in Minnesota, and the other one was Anchorage, Alaska. So I had a viewer, um, Kobe Brock, Kobe D Brock wanted me to review Anchorage, Alaska, and then I've got somebody, uh, Doodle Bro, Doodle Bros 2023 that wanted me to review Minneapolis or Minnesota. So we're going to look at those submarkets too. And then at the end, we'll dive into some comments. Obviously, if you have any markets you want me to analyze, please put them in the comments and in the chat. And yeah, I also want to know what's happening in your market. So what are you seeing? What's going on? I can tell you from a national picture, when I had a chance to review the Redfin data briefly, it looks like prices are up again, unfortunately. That may be slowing. Hopefully, it's slowing the price growth. But the market in general is just still slow. I mean, pending sales now are still down year over year, down year over year over year over year, actually. And so the market's just, it's just slow and sluggish like a wet sponge. So anyway, it's never a dull moment in the housing market, but I appreciate you joining me this afternoon. We're going to dive right in. All right. I'm just going to set my screen real quick. There we go. All right. So what I'll do is I'll just read some of what they have to say. I may read all of it depending on how much time this takes. So the name of the Redfin update is price drops hit highest level in 18 months as high rates dampen buyer demand. So just published today, May 30th. Now, keep in mind, Redfin, this update is a macro update, right? It's what we're going to talk about first is a national update. There's a little bit of local flavor, but mostly it's just national. And you have to take this data with a grain of salt, folks. Meaning, like Redfin, Zillow, Realtor.com, NAR, CoreLogic, even local MLSs, they all do things differently when it comes to gathering data. And so they look at data differently. They look at house sales in different ways and using different metrics. So it's important to look at your specific market, down to even the street level, maybe using local data from either like a Zillow or a Propstream.com or a Realtor, or if you have access to the MLS, look at that. So that is paramount to keep in mind. This is macro data. All right. More home sellers are cutting their asking price, suggesting sale price growth could soften in the coming months. But this week, the median sale price rose to another record high, pricing out some buyers. Nationwide, 6.4% of home sellers cut their asking price during the 4 weeks ending May 26 on average, the highest share since November 2022. The median asking price dropped roughly $3,000 to $416,623 in the last week, the first decline in 6 months. So, no doubt there are a lot of sellers that are cutting their price, cutting the asking price, and more and more and more. But we're also seeing the asking price itself drop for the first time over the last, if you've been following this, my live updates on Redfin, every single week, it seems like the asking price continues to climb nationally, the median asking price. But now it's actually dropped this time. So that's good. Additionally, for sale supply is growing more stale. Age of inventory, the number of days active listings have been on the market, started rising year over year in May for the first time in 8 months, hitting a median of 46 days. So days on market is growing. It's taking longer to sell houses in general. Together, those metrics suggest sale price growth could soften in the coming months as persistently high mortgage rates turn off home buyers. For now, the median home price is up 4.3% year over year to another record high, though sale prices are lagging indicator because they're typically negotiated at least a month before the deal closes. So what they're saying there is that, hey, if you negotiate a price, you go into contract, that median price was negotiated, if you close, the price was actually negotiated a month ago, because that's when you actually lock the price in on the contract, right? So there's time there it takes for the data to come through. Buyers did get a modicum of relief on housing costs this week. The typical U.S. home buyer's monthly housing payment dropped $2,812, its lowest level in 6 weeks. Payments are declining because even though sale prices remain at all-time highs, mortgage rates have come down from their peak, but now they're back up. Like I just checked, and yesterday I saw 7.24 on Mortgage News Daily for a 30-year fixed. The weekly average mortgage rate is 6.94, the first time it's dipped below 7%. But remember, this is 4 weeks ending previous week for the 4 weeks before that. So it's showing that the rates are actually under 7%, but that's not correct. They're actually over 7 now in most cases. It's worth noting that the reprieve in rates may be short-lived. Daily average rates started increasing this week after a string of disappointing Treasury auctions. Yeah, so the 10-year went up. Now mortgage rates are higher now. High costs are dampening demand. Pending sales are down 3.4% year over year, on par with declines over the last month, and mortgage purchase applications are sitting near their lowest level in 6 months. Low inventory is another factor pushing down sales, even though 7.8% more new listings hit the market than during the same period last year. Listing growth has been losing momentum, and that's true, for the last few months, leaving buyers with fewer homes to choose from than there typically are in May. All right, some comments from a local or from a Bay Area Redfin agent. The market is slower than usual, but well-maintained properties listed for under $1 million still get multiple offers, said Christine Chang, a Redfin premier agent in the Bay Area. People who are buying right now are typically doing so because they're having a baby or looking for a more family-friendly home. My advice for those buyers is to be open-minded. Consider single-family homes that are a bit outdated, but don't need major renovations, and or homes in lesser-known, non-trendy neighborhoods. That type of home tends to sit on the market longer, and buyers may be able to avoid competition and get a home for asking price instead of engaging in a bidding war. Buyers who can get by with less space should consider a condo. They're relatively unpopular right now, and many are going under asking price. That's interesting. So tell me what you think in the comments. Are you seeing condos in particular? I thought that was interesting. Are condos sitting on the market longer? They're not where I am in central Ohio, and houses in general. The flavor of the day really is more expensive houses are being listed, and more so than affordable houses. And the affordable houses that are being listed in general are in rough shape, right? So you need they need roofs or windows or foundation work. In Ohio, it's a lot of foundation work because of water damage, hydrostatic pressure in the basement and all that jazz. So a lot of bad basements, or they need completely rehab. Maybe they're in flood zones. And that, those type of houses, if they need a lot of work, that eliminates the first time home buyer with an FHA loan or a VA loan or even a USDA loan a lot of times, because they're not going to, they won't pass inspection. So that eliminates that buyer pool who's looking for that starter home. And the only people that can really buy those homes that are destroyed or even condos that are destroyed are a lot of times investors, or someone who has cash ready to do the renovation. or someone maybe with a conventional loan. But then you need 20% down. So a lot of first-time buyers, a lot of FHA buyers just can't afford the repairs needed to bring the house up to speed. So those houses may be sitting longer, but the more expensive houses are definitely sitting longer. And I'm going to show you that detail here in a minute, as far as what I've analyzed. So let's get to the leading indicators. Daily average fixed mortgage rate, 30-year fixed mortgage rate, 7.34 as of May 29. So yeah, definitely up higher than 7%, up from 6.99. Last year at this time, it was 6.95. So we're starting to close that gap between last year and this year with rates. Weekly average 30-year fixed mortgage rate, 6.94%, down from a 5-month high of 7.22 3 weeks earlier, but now it's higher than that. Last year, the weekly average 30-year fixed mortgage rate for this time was 6.57. So rates are elevated compared to the last few years. Mortgage purchase applications declined 1% from a week earlier. So not a huge decline week on week, but they're down 10% year over year. So mortgage purchase applications, the number of people actually applying for mortgages, is down definitely compared to last year. Redfin Homebuyer Demand Index down 7% from a month earlier to its lowest level in 3 months, down 12%, which now I don't put a lot of stock into the Homebuyer Demand Index. Maybe we should, but I don't. But if you did put stock into it and you were and you did want to use that as a measurement of demand, I mean, think about the fact that we're not heading into winter. We're heading through spring. So you would think the demand index would go up, all things being equal, right? But it's actually down to its lowest level in 3 months, they're saying. So that would tell me like demand is starting to wane even in the face of spring buying season, which means it's very likely that it could get even worse as winter comes. Touring activity up 10% from the start of the year. At this time last year, it was up 12%. So I guess it's down 2% year over year. Google searches for home unchanged from a month earlier, down 14% year over year. All right, key housing market data. Let's do this. Median sale price, $390,613. It's an all-time high according to Redfin on this report. I'm not sure if that's an all-time high or not. I've seen some videos recently, have had some discussions with other YouTubers about this stat and some other industry professionals, and they've definitely changed the all-time high mark. Redfin has changed that over the last couple years. Maybe because of revisions, I'm not sure. But regardless, if you look at the trend, you can see that it's up past the previous years. There's no doubt. $390,000 is the median. Remember, that's all houses. If you line them up, the one that's sold in the middle, that's median. So if you have more expensive houses listed than you do affordable homes, and so the ones that are selling, the few that are selling are expensive, it's going to drive the median price up. But I guess it doesn't necessarily mean that prices are going up in all cases, in all markets, obviously, for all price points. Median asking price is up 6% year over year, 416 grand, but they said that's down $3,000 since last week, I believe they said. Let me just double check this. Yeah. Median asking price dropped roughly $3,000. So last week it was at 419. Now it's at 416 and some change. So maybe that'll be a relief in the future if asking price continues to decline. Median monthly mortgage payment, $2,812. We know that. We just talked about it. Pending sales, 89,000 units, down 3.4%. And now look at this. New listings, 101,000 units for the 4 weeks, up 7.8%. So look at that spread. 101,000 units newly listed, pending sales, which are contracts that have been signed. Conceivably, most of those will close, you would think. 89,000 units. So you look at that spread, and there's like 10,000 units that are now on the market as active that have remained approximately. That's how I look at that. So we are gaining inventory there. And you can see it in the active listings. Look at this, 912,000 active listings now. That's a 15.2% gain year over year. It's the highest level since December of 2022. So more active listings means more choices for buyers, and that's a good thing. Months of supply, 3.2 months of supply. 4 to 5 months is a balanced mark. 4 to 5 months of supply is considered balanced. 0.5 points higher than last year. So this is how many houses, how much supply do we have if we continue at our current pace of sales and pending sales? How many months of supply would we have if we don't add any more houses? We have 3.2 months of supply. Now, again, if the 3.2 months of supply is all, concentrated with higher priced homes, higher than the median in your market. So like if you're in Miami or South Florida and the median price is like 600 grand. I'm just making that up. I don't know if that's true, but it's like 600 grand. And then you see $1 million house and it sits on the market for 6 months. And then you see another $1 million house get listed and you think, man, the supply is increasing. Well, it is technically, but in reality, it's not for you if you're not buying $1 million home. It's kind of irrelevant almost. And the guy buying $1 million home is not buying a $600,000 home. So, the months of supply is great. It's a good measurement, but you got to go a layer below that. Share of homes off the market in 2 weeks, 44.7%. This is important. Down from 49%. So homes are sitting longer. There's a less share of homes. Fewer homes are actually coming off the market in 2 weeks or less. It means it's not like a hyper sale. You still have, 44.7 are coming off in 2 weeks or less. They're probably the affordable homes and homes that are, in good shape in good areas. But it is changing. That's a big change. It's almost 5%. Median days on market, 32. That's up 3 days. So if you're looking for a deal or you're trying to find, where you should maybe buy, if you're looking at different zip codes or school systems or something, pay attention to median days on market, particularly in your price category, because days on market, if a house sits longer, there's bigger chance you could get a discount versus houses that are just flying off the market. So the fact that overall homes are taking longer to sell, that usually means maybe some, discounts can be had in the future. Share of homes sold above list price. More good news for buyers. 31.8%, down from 34%. So the percentage of homes that are selling, above the actual listing price, that's not the original listing price, by the way. That's just the list price, because they could have started like pretend a house is 100 grand when they list it. Yeah, right. A big dream, right? And then they discount the price to 90 grand because nobody will buy it. And then somebody offers them 90 grand and they take it and they say, oh, we sold it for 100% of asking. Well, that's true, but you had to discount it 10 grand to get it. So this isn't original list price. This is just list price. So this doesn't really take into account the discount if they did discount the home. Nevertheless, it's good to see that homes are actually, the percentage of homes selling above list price is dropping. Share of homes with a price drop, 6.4%, up 2 points. So greater percentage of homes with an actual price cut. It's the highest level since 2022. They actually called that out again. Okay, so active listings is at its highest level since 2022, December of 2022. And share of homes with price drop, that is at its highest level since November of 2022. Average sale to list price ratio, 99.5%, down 0.2 points. So, yep, you've got homes basically, and sellers are basically getting what they're currently asking, but it's not over 100 at least, which is great. It is in Columbus, by the way. In my market, it's like right over 100%. All right, metro level highlights. So this is the metro level data for the 50 most populous US metros. Select metros may be excluded from time to time to ensure data accuracy. Median sale price, where they went up the most in the top 50 metros. Anaheim, Detroit, Nassau County, New York, San Jose, California, and West Palm Beach, Florida. This list repeats every time. Like every week, this is like almost the same list. So if you live in one of these areas, prices are obviously elevated. They continue to go up. I mean, when the national number is up 4% and you're up 19.3% after you were up, whatever, 19% the week before and 20% the week before that, I mean, it's got to be just brutal in those markets. Metros with the biggest year-over-year decrease. No surprise, it's Texas. Just 2 out of the top 50 most populous metro areas. Pending sales. Where are pending sales rising the most? San Jose, San Francisco, Columbus, Ohio, San Diego, and Anaheim. Where are they dropping the most? Pending sales. Houston, West Palm Beach, Atlanta, Fort Lauderdale, Orlando. So definitely 3 Florida areas. Then you've got Atlanta, that's Southwest as well. Is Houston Southwest? I guess it's the South, maybe the Gulf, you'd call it. I don't know. We'll call it the South, but I mean, it's obviously, it's increased 13. The pending sales increased in 13 metros out of the top 50 most populous. So most of the metros, pending sales decreased. So the market, again, like I said at the beginning, is slow. It's just, there's not a lot of turnover. There's just not. New listings. Those are houses that are newly listed on the market. San Jose, California, 34.5. We got Phoenix at 24.7, San Diego, 21%, Oakland, California, 20.1, and Montgomery County, PA, 19.5. So look at that San Jose. I mean, San Jose is like, I would love a San Jose realtor or investor, or even if you just live in San Jose or know somebody. I want to know what's happening there locally. Like, it's always on this top list of everything. Like San Jose, so new listings are up a ton, 34.5. Tons of inventory hitting the market compared to last year. Pending sales are up, so people are buying and selling more. And then median sale price is up too. So it's like, man, they're in the top list all the time. Where are pending sales dropping the most? Chicago, Illinois, Atlanta, Newark, New Jersey, Detroit, Michigan, and Warren, Michigan. It's where new listings are dropping the most. So new listings decreased in 8 metros. Yep, 8 metros. So it increased, I guess, in 42 metros. New listings did. All right. So this is the chart that they show the charts, but I'm not going to use this. I'm going to actually use the real data, not their static charts. So I'm going to go here. And we're going to look at this instead. So this is the Redfin. Oops. This is the Redfin data center. And you can look at this really anytime you want. You can go to the Redfin news/data center. I'll put the link in my description below. And then you can come down here and type in your metro or your county and then look at all types of data here. I'll also tell you, not that you want to do this, maybe you want me to do this. I don't mind doing it. I like it actually. You can actually come in and download data behind the scenes, meaning this isn't even all the metrics that they track. They track a ton of data that they don't list in these tabs. It's kind of hidden in a way, but you can come in here and download the data over here. You got to play around with it. It's kind of finicky. You can download it into a data form or Excel or even a Tableau form, which you may know what that is, but it's just a way to look at data. You can download it and then put it into Excel or put it into Data Wrapper or whatever you want, and then analyze it. And it's got stuff that you may not see in any other Redfin report. So it's kind of cool. Anyway, all right. So let's start with median price. And then let me make sure this is going okay, that you can see. Ooh, you can't see, can you? Let me change my little thing here. Is that good? Nope, that's not good. I'm still getting used to this, folks. That's good. We'll use that. All right. Okay. So let's look at median sale price. So this is national. Then we'll jump into some local metros. Median sale price, we just looked at this, right? 391 or 390, however you want to look at that, up 4% year over year. I mean, it's definitely higher than the other years. I mean, look at this back in 2021 at this time. Like, we're kind of like right here, $331,000 last year. And now you're at 391. Not last year, I'm sorry, 2021. It was 331 grand. Now, 391. Ridiculous. Ridiculous. All right. Let's do new listings. Yep. So you can see new listings. It's like, it's not going directly up. That's what they were referring to in the article, is it's kind of lost momentum. And I believe this, based on just what I see locally, and when I analyze my local MLS data on a price category standpoint, you can just see the fact that people who own houses below the median, 300,000 in Columbus, if the median's like 340. So if you own a house like a $250,000 house, a $300,000 house, even a $350,000 house, and you're like, I want to sell this and move up into a $500,000 house or build a new house. A lot of people aren't doing that now because they don't want to get rid of the low rate they have. And they certainly don't want to buy a much more expensive house than what they have, maybe for just a little bit bigger of a house or just a newer house, just because they want to upgrade. So this kind of upgrade buyers, unless they have to move and sell, are not doing it, generally speaking. And I think that's keeping those new listings off the market. Let's look at, let me go here and drop down. Let's look at homes sold. They don't have this metric on their weekly update usually, but here's homes sold. We're up 4.2% year over year. That's interesting. So pending sales, let me go to pending sales. That's down, right? We know that. Pending sales down 3.4%, but homes sold 4.2% increase. But look at that. Homes sold 76,000 units during that 4 weeks ending. But if you look at new listings, 101,000 units. So there were approximately, what is that? 76,000 units were actually sold, but 101,000 actually hit the market. So that's a pretty big spread, almost 25,000 units. Right? Is my math right? Yeah, almost 25,000 units were just added to the inventory theoretically because this is homes sold. But it is up year over year. I'm shocked. I usually don't look at that metric on the weekly report because they don't usually show it. But inside the data center, you can see that. So yeah, up, but not as robust as you need if you want to. If you're somebody who believes that the inventory will shrink. Let's look at price drops. Yeah, so here's price drops, right? You can see them, they're definitely going up. Year over year, 2% increase, 6.4%. Again, people are cutting their asking price, I think, because a lot of those houses are houses that are overpriced to begin with, and they're just expensive homes. And expensive homes, a lot of times, especially when rates are like this, if there's not a reason, if there's not an advantage that that house has on the market, if it's just like the other houses in the subdivision and all the subdivision houses are 800 grand, it makes sense if somebody says, well, I'm going to try to get 850 instead of 800, where they're, where they think they probably know they should price it. They go, I'm just going to go higher and price it at 850 because I can always come down. By the way, it's a horrible strategy when you're selling your house. Start high, drop, bad strategy. Better to price it where the market is so that you can sell it fast and not have to discount it. All right, let's do months of supply. Months of supply, they measure it in weeks, but look at this. It's like flat. It's not increasing. So if really that much, I mean, it's 12.8. What was it? 12.6 last week. 12.7 the week before that. And the week before that, it was a 13.5. So like inventory, despite the fact that you see active listings being added, we just saw that sales, closed transactions are actually up a little bit compared to last year. So there is inventory being churned. There is, just not as much as we're used to. All right, we'll look at one more of these maybe, and then we'll go to local stuff. Let's look at average sale to list price ratio. Down slightly. It's 99.5. We saw that in the summary, but look at that compared to the other years. I mean, shoot. Last year, we were at 99.7. The year before that, we were at 1.01, 101% basically. And then the year before that, we were at 103%. So there's big changes happening there. I mean, the days of everybody paying over asking, that's kind of over. However, I will say affordable homes, they're still in good shape. Those are still going over asking, at least here in the Central Ohio market. Because I've helped some clients that we haven't been able to win any deals because people are outbidding, just going crazy with, cash offer, close in 2 weeks, no inspection, pay over asking, all that jazz. But you're talking like $150,000 to $220,000 homes. You're not talking, $1 million homes. All right. So that is the national picture. Now let's do CBUS, Columbus real quick, and then we'll do the other ones. Thanks for bearing with me and thanks for watching. All right, Columbus. Let's start with median sale price. Yeah, I wasn't surprised when I saw this. 346,000. We're at a new record for Columbus, the metro area, which is surrounding Columbus too. $346,000, a year-over-year increase of 3%. So is a 3% increase year-over-year for the sale price? Is that a lot? No. I mean, average, I think, when I looked over the last 20 years, if you average it out, even considering all the huge gains we've had over the last few years, the average is like 5 to 6%. So if you're at 3, it's up, but it's not up as much as it usually is year over year. So 3%, I think most people would agree, 3 to 5% increase year over year. That's normal. That's like a normal housing market increase, I would think. But it's not 15%. It's not 20%. Thank goodness. Let's look at a couple more here for Columbus, and then we'll move on. New listings, pitiful. Up 6.7%. You can see that slope going like that, right? It's just not, there's just no inventory. That's a problem. We have Intel that's just broke ground, not just, a couple years ago announced, and then they broke ground. I think they've been under construction for a year. An Intel fab plant to make AI chips. It's about 10 minutes from where I am right now, where I live. And it's already crushing the market, but it's going to really, really hammer the locals when it comes to affordable housing. Because there's just, it's farmland. There's no subdivisions. There's no massive housing developments. It just doesn't exist. Look at active listings. This is a pain. I'm going to take this out for a second. 2022. Oops, I'll put that back in. $5,100, a 12.52% increase year over year. Definitely an increase in active listings. There's no doubt. But you're seeing that start to go like this because new listings are starting to go like this too. So again, it's a lot of expensive houses or houses that nobody wants. All right, let's look at one more and then we'll move on. Let's look at sales. Homes sold. Just like national, it's up. This is 9.3% up. So the number of transactions actually completing is up significantly. Last week, we were up 5.7. I was wondering if it would keep going up, and it is. So people are buying and selling, but I think that's a factor also of that, of active inventory increasing like it has. So active inventory increasing, you know, regardless of what's happening, you're going to have people buying and selling at that point more than you did before when there was zero inventory almost. So anyway, that's what's happening in Columbus. Very, a lot of sluggish movement. Prices are high and inventory is woefully low. Good inventory. All right. So let's do Anchorage and then we'll do Minnesota. So you come here if you want to look at your stuff or your market, wherever you are. Anchorage, Alaska. Never been to Alaska. One of the states I've never been to. Looks beautiful. Let's just start with homes sold. So you've got a home sold 101 units. That's a year-over-year decrease of 0.2%. Looks like it's just like it was last year. Again, sluggish market, not a lot of movement in buying and selling, obviously. Let's look at new listings in Anchorage, Alaska. Look at that. Up 17%. Wow. Wow, can that be right? New listings, 169 new listings. It's not very many. Down, that was last year. So up 17%. Yeah, new listings are going up, 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 up. What about, let's find active listings. I wonder if those are up. Yeah, look at that. Up 18.56 year over year. Active listings, 837. I mean, last year you were at 706. So it's less than it was in 2022 and 2021 as far as the number of houses for sale, but definitely more than last year. Price drops. 6.7% of homes had price drops. Wow, look at 2022 in Anchorage. At one point, it got to 9.3% of listings had price drops. Jeez. Back a couple years ago. But it's definitely headed up. There's no doubt. A lot of people looks like they're discounting more than they did last year, and even more than they did in 22 or 21, but 22 had a massive spike in price drops. Average sale to list price ratio. Look at this goofy chart. 99.9. So essentially, sellers are getting basically what they're asking for houses. I mean, it's right there, 99.9. It's not over 100 like it was the previous years, but it's right under 100, but it's definitely lower. So that's encouraging. Let's look at median days on market. Geez, this chart's rough to look at. Median days on market, 9.3. What? Median days on market? How is that? What's going on there? Take this out. Up 0.10. Wow. Look at that. That is completely crazy. 9 days. Jeez. I mean, right now nationally we're like at 42. I think that's right. It's in the 40s. 9 days. I just can't believe that. 9 days. That's crazy. But it like last year was the same. It was like right in that line. What was it the year before that? Even worse. Look at this. What's this one? 4 days? 6 days in 2022. Man. 2021. Wow. Okay, 21 was even worse. So this is actually better slightly this year than it was in the previous years. It's still horrible. 9 days. That's nuts. I mean, look at it. Maybe Probably, I mean, obviously there's big swings there in season. So maybe that's why. I mean, look at the drop you have from winter compared to spring. I guess it makes sense. People probably buy and sell in spring there because you can actually function. That's just a guess. Jeez, I'm shocked at that one. All right. Let's do, oh, I want to do median sale price for Anchorage. Did we look at that? We didn't look at that. 400 grand median sale price in Anchorage, Alaska. Definitely up compared to last year at this time, but look at last year, you hit, looks like a record over the last few years of 421. That was an increase, by the way, of 13% last year. You know, will you hit it this year? I don't know. You have more inventory. That's true. You could, but at this point, it's $400,000, up 1% year over year. Okay, let's look at Minnesota. So I'm just gonna pick. There's a few Minnesota cities on here. This was Doodle Bros 2023. They didn't tell me exactly where they wanted to be. Let me check the comments and see if they're on here. They're not yet. Okay. So I'm gonna pick Minneapolis. Median sale price in Minneapolis, 382. Year-over-year increase of 3%, but it's starting to head down. Look at that. It's head down. It's been going down over the last few weeks. Now 4%, or I'm sorry, 3% increase year over year. Well, back in 2021, median sale price was 346. Now it's 382. All right, I'm going to go to days on market because I want to see if it's like, yeah, look at that. It is. I wonder if it's because of the winter being so bad there. Not bad, but just cold. I'm not saying it's bad to be in Minnesota because Minnesota's great, but it's cold in the winter. Look at median days on market, 18 right now. 18. Go back into other years, 10. 18 days. That's still not healthy. A lot of people think, oh, realtors want it to like sell immediately. Like they like hot markets like that. Some realtors may like that. I don't. I think it creates bad decision making on the buyer and the seller end. As a seller, you get a bunch of offers. All, you feel like the king of the castle. Look at all these offers. Look at all these offers, and you think like you're like a bigwig. But it's hard to, then you have to make a decision on all these, what offer to go with. And it usually happens in days when it was a hot market. So it's hard to, take a deep breath and actually make a decision. Not only that, but then you have a contract and you got to move out within 30 days. So as a buyer, people just throwing stuff at the wall, I don't care, offer way over asking, whatever, doesn't matter because it's a hot market. More days on market, I think, creates a lot better decision making. All right, let's look at price drops. Definitely going up. 6.3% of active listings had price drops. Months of supply. 9.1 weeks of supply, which is like just over, what's that? Just under just over 2 months of supply. Basically where it was last year. I'm curious about new listings though and active listings. New listings. New listings, 1,358, year-over-year decrease of 0.7. So, yeah, unfortunately for the folks in Minnesota, Minneapolis anyway, you're not adding as much inventory as you did last year. So let's look at active. Yeah, it's kind of tailed off, right? Now it looks like it's threatening to go underneath 2022. And maybe even cut through 2023. Now you're at 9.5% more active listings, but it's not shooting straight up. So, let's look at home sold. Did we look at that yet? No. 12% year over year increase in home sold in Minneapolis. So people were buying and selling more than they did last year, not like they did the years before that, but, and this is leveling off, but certainly more activity at least. That's probably why that's why the months of supply hasn't really shot up that much, is because now that you had more inventory, maybe some people are starting to buy and sell more, obviously, than they did last year, but it's not a ton more. Okay, so that was Minneapolis and Anchorage. We also did Columbus. Let me look at some comments, see what we got on here. Interested about your thoughts of Akron, Ohio, if you have a chance. Both prices and rents have gone up, but time on the market has gone up as well. Also, houses that need work are not moving. Yeah, let me just look at that just briefly here. I think they're in this list. Yeah, Akron, Ohio, I keep seeing this on my data sets. Let's look at pending sales. I don't have the rent information handy, but median sale price in Akron, Ohio. That's probably why we're seeing a lot of activity. $211,000 for the median sale price. Huh, it's a relatively affordable area. Year over year up 5%. So it has gone up. New listings, flat. That's probably one of the reasons why prices keep going up. New listings are flat. Active, wow. Look at that. Active listings down. This is an anomaly, right? Think about this. You've got areas where active listings are up like 29%. Double digits easy. And then you got Akron down 8%. I didn't expect that. So that's why you're probably seeing prices increase like that. Median days on market. Let's look at that. 20. Not healthy at all. Definitely not healthy. And then let's look at average sale to list price ratio. Over 100%. Wow, look at it back in 2022, basically 103%. So man, Akron is just, there's no inventory there. None at all. That was cool. That was a cool little experiment. Yeah, thanks for that comment. Who else we got? Oh, Coors Light, what's happening? In California, condos stay contingent longer. Oh, he's in California. Condos stay contingent longer, but they eventually close. The inventory is still low. Oh, okay. Unless you're shopping over $1 million, like that agent said, right? Oh, here's this dude again. Trade better 20. Condos are offering lower prices, but HOA fees can be up to $400 a month. That's right. That's true. In fact, I just helped somebody. I helped a couple people this year buy mobile homes, and they were buyers that were looking for like, a starter home, FHA style home, but couldn't find it in their price range. So then they went to a mobile home solution, and actually some of the mobile homes they looked at were really nice, but it was less money. It was like half the cost. The mobile home was actually half the cost of the houses they were looking at. But just like a condo, and that's a great point, Trade Better, they the lot fee killed them on the monthly payment. It made it like the same as buying a house, and it was like really didn't work out that well. So I think condos are the same way. It's really a complete loss. Like you can't write off the condo fee. You can't write off your lot rent if you're in a mobile home park. There's nothing you can really do with that money. It's just kind of just thrown away money. Except it does pay for like the maintenance and the, sometimes the cable TV. And do people have cable TV anymore? I don't think they do. And internet or whatever. Sometimes the snow removal, water, sewer. So that can help. But yeah, the lot fee is like a complete just expense, or the condo fee is a complete expense. Yeah, condo fees can kill you. They can kill you. Florida monthly HOA fees are jaw dropping with all the new requirements taking place. Yeah, I've heard that too. I know some folks in Florida, and they're saying their condo fees are like out of this world. And the assessments too, from like making them hurricane ready and hurricane proof. Watching from Minnesota. Nice. Well, thank you for joining me. Anissa? Is that how you say it? Anissa's Corner? Is that like a store you own, like a corner store? I don't know. It could be. But thank you for watching. I appreciate it. Oh, Ham Lake, Minnesota. Boy, I don't know if that's on the list. Ham Lake, Minnesota. Let's find out. Maybe too small. Maybe not. Nah, not on here, unfortunately. But I will write that down. And when we, sorry, I'll write that down, Anissa. And when I look at the lower population areas like Ham, Minnesota, Ham Lake, Minnesota, I'll be sure to review that. Maybe next week I can do that on the live. I'll have that data pulled up for you. Great. Well, thanks for the comments, guys. I really appreciate it. What else do we have today? Let's see. Oh, my free cash flow and flip and deal funnel calculator is available. It'll be in my description when I publish this video, and it's in my other descriptions over the last few weeks. I have it in there. But I have a free calculator that it's a Google sheet and it has 3 tabs on it. One tab is cash flow for a rental calculator to find out if something will actually cash flow or not. And one is a flip calculator that tells you, hey, how much money can you make on a flip, depending on, different variables. And then the third tab is a deal funnel where you can kind of keep track of all your deals or all the houses you're looking at or properties, and then analyze them, one against each other. And it's really the same tool I use every day as an investor to track houses and properties and see what's out there and how they compare as far as cash flow and return on investment and all that jazz. So anyway, that'll be in my description. I definitely encourage you to check that out. And that's it. By the way, if you subscribe to my channel, thank you so much. If you haven't, please do so. I just passed 500 subscribers, which is like 500. I mean, that's not that many. It's not. But maybe one day I'll have a lot, but that's not really my goal. But I just saw that yesterday and thought, that's cool, 500 subscribers. So if you have subscribed, thank you so much. I appreciate your support. And if you have any questions, comments, concerns, whatever, just shoot me an email. It's in my description. Leave a comment here on this video, whatever you do. And thank you. Thank you for watching. I hope you have a great weekend. And we'll see you on the next Redfin live update.